Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
It is 2 p.m. Central African time. A very good afternoon to you, and thank you so much for taking your time to join us here on Nedbank Business Watch, tracking the latest business developments happening in the Kingdom of Eswatini, and really just every other story that has implications on the economic trajectory and reality of the Kingdom of Eswatini. My name is Sifiso Malena with Lungelele Makakula. We're going to have a great show today.
Yes, we will definitely. A very good afternoon to our viewers. Thank you for joining us. Happy to have you here on our program. We are coming to you live from Hospital Hill, not Hospital Hill, Coronation Park.
Coronation Park, EBIS Studios.
This is Nedbank Business Watch. Many people hear the word investment and immediately think it is something only wealthy people do. That's not true. Stay tuned and listen to a conversation Fiso had with Zamangwane Dlamini on the difference between saving and investing.
Of course, we do also want to trigger in and drill into a story that now puts Eswatini on a map on a positive note. Lilangeni ranks among Africa's top 10 strongest currencies for April 2026. It is a beautiful story, and of course that is coming from the corridors of the global finance, and this matter really just places us firmly in the continental conversation. We are going to understand really what this means, whether it is something to celebrate, whether it does have economic implications with our economist Sadelas Bia later on the program. Stay tuned for that one. Good afternoon once again. It's 2 minutes after 2.
Yeah, well, let's go to our first story, our business news.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You are watching Nedbank Business Watch. Thank you for tuning in.
Our first story now, we look at the Youth Chamber of Commerce and Industries Eswatini that has officially partnered with the Comesa Federation of Women in Business, that is the local chapter. They've partnered through a newly signed MOU that is, according to President Sakile Nsibanze, who says this collaboration marks a significant step toward empowering young entrepreneurs and women in business. She further explains that it's going to unlock new opportunities and also going to strengthen networks and drive inclusive economic growth. The ceremony was held at the American Corner in Manzini.
This is an exciting partnership for us as a youth chamber because we have seen that Comesa has a very good regional impact, and us, we are more grassroots as a youth chamber. So the connection and the linkage will now be able to integrate the two organizations and make a bigger impact for youth in business and women in business, as well as the differently abled people.
Chairperson of the COMESA Federation of Women in Business Eswatini chapter, Thandi Nxumalo, says the Memorandum of Understanding marks a pivotal milestone, laying a solid foundation for accessing funding from COMESA.
Lokuhlangana kahle besinabo bantwana lapha nalapha, but we didn't have ma structures lanjengalawa abo. I think lokho kutasisita kakhulu because even ku region sike sakhala ngakuthi bantwana asesiyibonele impact yabo nabo, because logo it's a women, youth and labakhubatekile, but asiyiboni kahle le impact yala bantwana ukhanza kusolo bomake ngithembile. So the last mhlangano wethu nje lapho kwa raiswa lokho ngicabanga ukuthi lokho nje thina Eswatini kutasisita kakhulu, kungendeka ukuthi sibe lihlahlandlela ekuchamukeni ne-youth yethu le vibrant kanje.
She adds that the agreement opens up new opportunities to engage and empower young people, addressing a various gap and significantly expanding their reach to the youth. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa Manzini.
The Indalo exhibition by the EU, International Trade Center and government, which commenced on Friday last week at the Alliance Francaise in Babani, is providing a platform that connects rural artisans with larger markets and commercial opportunities. The exhibition brings together local craft makers, designers and small-scale entrepreneurs, giving them an opportunity to showcase their products to potential buyers, retailers and other industry players. We spoke to Theophilus Dlamini, micro, small and medium enterprise expert at the International Trade Center, who explained more about the exhibition.
We've done Paris twice, Copenhagen and Eswatini last year, and this is the second time. So from the experience that we've had with Indalo exhibition last year, it was very good. We had a great performance and exhibition, and it led to many sales locally. Mostly our artisans had been exporting to the EU, but after that exhibition that we hosted last year, we got interest from local buyers. Some of the hoteliers, the Hilton already has a setup that they bought from here, and some of the lodges, including Mantenga Lodge, and individuals from the country. So what we try to achieve with these exhibitions is to expose local artists to the local market, as they are already exporting globally. So it creates local opportunities and a market that is immediate to the local consumer. It also builds more connections between the buyers as well as the artisans. We currently have 5 artisans that are exhibiting, but we also had other MSMEs that also participated in the exhibition that are not necessarily in the exhibition room, which were here on the Friday and the Saturday when we had the public events. So the exhibition opened on the 1st of May and is going to be running until the 30th during the weekdays. We're not open on weekends, so we would encourage Maswati to still come to the Alliance Francaise and interact with the products that we have here and some of the artisans which might also be on site.
In breaking news, the Ministry of Natural Resources and Energy has announced a fuel price increase that will take effect from midnight on Thursday, the 7th of May 2026, and will be effective on Friday, the 8th of May 2026. The ministry says the revision reflects updated cost factors that are affecting fuel importation and supply. For motorists and households, this means higher transport costs, increased delivery prices, and added pressure on basic goods, especially for those that are relying on diesel and paraffin. The public is therefore advised to plan accordingly as the new prices come into effect. New fuel adjustments: unleaded petrol plus 2 emalangeni 92 cents per litre. Diesel is 6 emalangeni 0.40 cents per litre. Illuminating paraffin now at 6 emalangeni 78 cents per litre. The new fuel prices will therefore be as follows. The price of unleaded petrol ULP 95 will increase from 22 emalangeni 35 cents per litre to now 25 emalangeni 27 cents per litre. The price of diesel 0.005% will increase from 25 emalangeni 0.20 per litre to 31 emalangeni 0.60 cents per litre. And the price of illuminating paraffin will increase from 19 emalangeni 50 cents per litre to now 26 emalangeni 28 cents per litre. Yeah, a moment of silence for
it is quite shocking, quite sad, and quite stressful for consumers and motorists, of course.
19 emalangeni to 26 emalangeni. Anyway, yeah, that is it coming from the Ministry of Natural Resources by breaking news and, of course, our business news segment. And then we'll go for a net break. We'll be back shortly. All right, a quick recap from something that we looked at a little bit from our business news segment as we enter now our Enterprise Watch segment with Sanele Sbi, our economist. We do want to look at Eswatini's Lilangeni, of course, that has secured a spot among Africa's top performing currencies later on. But for now, we want to look at this fuel price increase as the breaking news have come in from the Ministry of Natural Resources and Energy. Sanele, thank you so much for joining us again this afternoon. We just really pronounced the numbers coming from the Ministry of Natural Resources and Energy, and really, it's the kind of numbers that have shocked a lot of consumers. Motorists are frustrated right now. Maybe if we could just highlight the numbers first, and then you will tell us really just how you are reacting to this and some of the economic implications of these numbers. The new fuel adjustments are unleaded petrol plus 2 emalangeni 92 cents per litre, diesel plus 6 emalangeni 40 cents per litre, illuminating paraffin is at plus 6 emalangeni 78 cents per litre, which now means that the price of unleaded petrol will increase from 22 emalangeni 35 cents to 25 emalangeni 27 cents, and the price of diesel will increase from 25 emalangeni 20 cents per litre to 31 emalangeni 60 cents per litre, and the price of illuminating paraffin, a whooping jump from 19 emalangeni 50 cents to 26 emalangeni 28 cents. Just significant increases here. Of course, they will take effect in the next 24 to 48 hours. How do you react to this?
Thank you, Mr. Ngumaru. I think we have somehow become the prophets of doom, because we did speak about this in the morning. And remember, the number we had earlier on in the year was a 5 to 7 emalangeni increase in prices of both fuel and diesel. And it seems indeed we are getting there. And in the morning we spoke of, how we are going to have to manage the subsidy and exit from the subsidy. Again, this is what we're saying. The government is talking of a 209 million deficit, which the government now still has to go back into the stabilization fund and pull out that 209 million emalangeni, and that is just going to further deplete the fund right now to just below the billion emalangeni mark. It's going to leave it at 800 and something billion. So right now, I think we are at a situation where we try trying to manage how we can both exit and still have the fund ready for days when it does really get tough. So yeah, I think we did speak about this in KBS in the morning, and indeed it is coming to fruition. And unfortunately, it is one of those things that we have to live with. Remember, we do not have any control over our oil prices. We don't even have a drop of oil in Eswatini soil. At least none hasn't been found yet. And also, we should be grateful of the fact that, albeit the fact that the Lilangeni remains volatile in global markets, but overall we are very much in a strong position, and that somehow helps us with our fuel imports. And I think it's one of the issues that are assisting the country to better absorb this shock. But still, the impact of that subsidy that government put in are still there in the markets, because remember in the morning we're anticipating something around 5 emalangeni for petrol, but still you can see that we are aiming for that gradual landing in terms of the shock, because the truth of the matter is the shock is coming. We may see the price of oil getting to the 30 per litre mark if, and again, if and only if this war continues unabated into the foreseeable future, Mr. Nxumalo.
Yeah, that's quite interesting indeed, and interesting perhaps not in the most positive connotation there. I want us to move along, because this is a conversation that we've had before, and I think some of the economic implications are pretty much obvious now, and we spoke about elasticity in the morning. Perhaps now let's move on to another topic of the day, and one that perhaps is on a brighter and positive note. Eswatini has secured a spot among Africa's top performing currencies, coming in 8th for April 2026 in the latest rankings released by Forbes. It is an international publication that covers business, finance, technology, as well as economic trends. The report places Tunisia, Dina, at the top of the list with a value of 2.88 against the US dollar. Libya follows in second position with its Dina trading at 6.34, while Morocco's dirham takes third place at 9.25 to the US dollar. Eswatini's Lilangeni is listed in position number 8 with an exchange rate of 16.55 to the US dollar. What does it highlight? Is it a relative strength within the region, Mr. Spear? What does it really highlight? But maybe before that, what kind of methodology do they use here before we celebrate anything?
Thank you, Mr. Nxumalo. So the methodology basically is one that looks at that currency volatility, and also look at the conversion to the dollar. So you would see that currencies that are relatively closer to the 1-to-1 ratio with the dollar tend to be ranked higher. And then also, issues of financial, security and stability. Now that's in the sense of how easy is it to counterfeit the money, or the prevalence of levels of counterfeit. We look into things of, these things of money laundering and all of those things. Remember now that just around January or February, South Africa was released from the grey list zone, and now that is one of the things that have actually contributed to seeing the Lilangeni moving up the ranks, and that is due to the fact that we are linked 1-to-1 to the South African rand, so that peg, whenever South Africa gets readjusted, we also get readjusted as well. And also there is the issue of the low inflation in the kingdom, Mr. Nxumalo. If you look at the numbers, inflation has been on a disinflation spiral ever since December of last year, where we started seeing inflation going down to the lower end of the 2% spectrum, and actually entering the highs of that 1.8 spectrum at the 1% spectrum. And I think it's only now that we expect it to come back to the 2% levels, and maybe it's going to get to the upper 2.5 to the upper 2%, upper range of the 2% zone, most likely to 2.5 if this war continues well through to June and July. Then we're going to get back to that, because we're going to see fuel continuing to drive inflation. So having that stable inflation, Mr. Nxumalo, now, that is one of the key factors. And also remember that our macroeconomic policy is largely linked to that one of South Africa, and South Africa adopted a new stance last year around September, where we saw Minister Kondongwane coming out to say the target range for inflation right now is going to be, 3% with a 1 percentage point diversion. So that means essentially the range is now 2 to 4% instead of chasing the high 6%. So all those combination of factors work together to assist, prop up the currency. And that's been quite visible with the Lilangeni. Remember when President Trump took office, we were on the 18-19 region with the dollar, but now we're back on the 16 zone. And before the war, the forecasts were we're going to get back to the 15 range, which now would have meant South Africa has returned to its 10-year average, because we last saw such numbers before the Cyril years, just at the end of the Zuma era there.
I do want us, you hinting on at Zuma, I think is a good pivot to my next question, because we know Eswatini's Lilangeni is pegged to the rand according to the through the common monetary area. And so to what extent really is this accolade, for lack of a better term, a reflection of Eswatini's own economic fundamentals versus South Africa's monetary performance?
By and large, Mr. Ngumalo, it is somewhat a reflection of the country's stable economic conditions, because in as much as there is the peg, there are Eswatini specific issues that are looked at when you do that entire index. So such factors include, we've already spoken of low inflation. We've already spoken of, there's also issues to do with the regulatory framework. We know that Eswatini cracks down hard on, on money laundering. So if you look at the layering it takes for money that's coming out of the kingdom to get into the kingdom, now those are the things that you need to consider as being Eswatini specific factors, which then go into this calculation. So we've really done well as a kingdom, and then we've done well as a kingdom. We've set up the financial intelligence unit there, where we really are tracking all of these things. We've seen the central bank coming in to crack down on these fly-by-night cryptocurrency schemes. So there has been quite a lot that's been done domestically, Mr. Ngumalo, to actually show that the currency, the domestic conditions and the domestic policy environment does warrant Eswatini's classification within the top 10 most stable, currencies in sub-Saharan Africa.
I mean, the Kingdom of Eswatini is getting ready to host the second inaugural Eswatini Investment Conference, I believe it's what it's called, under the custodianship of the Eswatini Investment Promotion Authority. And this one is set to be hosted at the ICC, and it's going to be very big from what I'm hearing through the grapevine. And it makes me wonder, seeing this Lilangeni of ours ranked ahead of a lot of, African economies. Some of them are even larger than us. From an investment point of view, how does this position us, and what does it say about our financial stability?
From an investor's perspective, Ngumalo, what it says is you're looking at the Kingdom of Eswatini as an ideal investment destination, because, investors tend to avoid settings where the currency is very much volatile and it becomes relatively difficult to actually even transact and actually send money. You don't want to be in a position where you sold your commodities for, say, $2, and by the time the commodities get to the market, $2 is no longer quite the money that it was before. And then also, if you look at the stable currency, getting closer to the 1-to-1 ratio with the dollar now means whenever Eswatini imports, we are not necessarily going to have to deal with the issues of exchange rate premium in terms of our imports into the country. And therefore our exports, even though they become relatively less competitive, but you are able to build an overall competitive advantage by taking advantage of all these other factors and sectors. So yes, it's going to do very well for our production processes as we continue importing, inputs for the production process at a lower exchange rate premium. So we are becoming a relatively stable destination. Remember, we're talking of a local payment switch system that makes it instant to transfer any amount below the threshold of 50,000, and we have an environment where individuals and businesses can actually open foreign denominated accounts. That would be your dollar accounts, your euro accounts. So yeah, I think we are on good footing. The financial environment is quite maturing, and if you are looking at fintech through that sandbox methodology at the central bank, now again, that is also one of the factors that businesses are going to be looking for, and fintech is becoming the next frontier and the next payment modality. So the fact that you're able to use those new modalities in fintech within Eswatini bodes well with investors, and we do expect a very good turnout in terms of the investors that are going to be coming into the country looking for potential opportunities that they can actually take advantage of.
While a stronger currency can certainly boost confidence, Mr. Spear, it can also have an effect on the price of exports, right? So could this ranking make industries like manufacturing, textiles, and agriculture, could it make them could it have a competitiveness effect to them?
Yes, Mr. Ngumalo, as you take away the exchange rate premium in your imports, but that means you are taking away a part of your competitive advantage, that exchange rate competitive premium there, that's what should be taking off the table. But if you look at the way that our economy is configured, Mr. Ngumalo, if you talk of the textiles, the government has built a number of those textile factories there, if not all of them. And when you look at the rentals that are being paid there, so we do have scope to play around with all the other components in the production system to ensure that we remain competitive in global markets, and we do have the basic infrastructure for that. So we would still have quite a number of fiscal policy levers that we can pull to ensure that these industries do remain competitive, and they do get some sort of advantage going into international markets. So yeah, as much as our exports are going to get a bit more expensive, but there is quite a lot that we can do through fiscal policy, and also private sector in itself gets driven to a point where you have to become more efficient in your production processes, because remember, in business, it's either you adapt or you die. That's just the cutthroat business world, and that's how it is. So when you get into a competitive advantage, into a competitive environment, it tends to push you to become more efficient, because competitiveness doesn't only lie in that exchange rate premium, but it also lies in what we'll call, the technology. That's one of the long-term drivers of growth. How well is your technology and your input combinations arranged? So you can actually just produce more by changing your state of technology, and that's the level of competition that business out there needs to be ready for, and that is the level of competition that we would want to see, where we become at a level where we can actually compete at a one-to-one basis with the global conglomerates, and find places where we have that comparative advantage. So we are going to see those shifts, Mr. Ngumalo, in the short to long to medium term, but it's not in a bad direction. It's in the direction that says Eswatini is finding it's competitive, because now that will be your real competitive advantage, not just competitiveness that comes about as a result of a weaker currency.
I mean, Mr. Spear, you did mention in the morning that Eswatini is still heavily import dependent. I think that's the phrase that you used. And it makes me wonder, does this relatively stronger currency then translate into any real relief for consumers in terms of fuel, of food, and other imported goods?
So to answer that question, Mr. Numalo, can you answer me this one? How much did you pay for your Netflix subscription last month? And then how much did you pay for it in November last year? So you will see the difference there.
I wish I had Netflix.
So essentially it is. Yeah, so in nature, essentially, a stronger currency helps make our imports relatively cheaper. And the price of fuel that we're talking about right now, if we had a weaker currency, if we were still at that 19 to 1 range with the dollar, we would be talking Proptignanium numbers. We would be in the double-digit increase. I promise you that, Mr. Ngumalo. So yes, a stronger currency does help us, avoid certain certain incoming certain imported inflation, and it helps the local economy stay relatively stable. And it does make a lot of our imports cheaper. If you're buying your sneakers straight from the US, you need less money right now. Whatever you're importing from the US now requires you to have less money, whatever you're importing from it everywhere, and that makes the Lilangeni go a bit further in global markets.
So certainly something to celebrate that Lilangeni ranks among Africa's top 10 strongest currencies for April 2026. Thank you for your insights, Mr. Spear. Our conversation ends there. We go for a net break. We have more for you when we return. Welcome back. You're still watching Nedbank Business Watch. Thank you so much for staying with us. Our conversation today with Head of Branch Networks from Nedbank Eswatini, Zamangwane, is centered around investing, which is one of the very essential topics, but very overlooked in most cases. And a modern poet, which is a rapper, has said before that scared money doesn't make money. So you do want to invest your money. So let's demystify the myths around investing and make you motivated to invest whatever it is that you are saving on the side. Zamangwane, thank you so much for joining us on the program. Perhaps I want us to start here. Nedbank loves to interact with customers across different income levels, right? Are you seeing a shift in how the ordinary Liswati or how the ordinary Emaswati view investing in particular?
Good afternoon, Mnguni. Thanks for having me. I think your quote just is running through my mind. Yes, we are seeing a shift in how Emaswati view money. In fact, we really appreciate that the conversations are happening. The conversations must happen. I think money is relatively tight for all of us. And as Nedbank, we believe that we are the financial experts. So we always want to help customers and consumers understand how to manage their money better and also how to grow their money. I've mentioned that money is tight. So, of course, we start to think of how do I get to save for the future? How do I make a saving when an expense goes up? Or we're in a situation now where we're seeing even fuel prices are going up. So in turn, even the cost of goods will certainly go up. Emaswati are alive and conscious to what options do I have and how far does my money take me currently?
Yeah, a very tight fiscal space for almost everyone, and you're right on that one. But there's often the conversation around starting small.
Yeah.
I want to understand how Nedbank is enabling its customers there to really begin investing even with the modest amounts.
I think you are touching on it with respect to some of the misconceptions that people would have around investing. One would typically assume that you need to have a lot of money to start investing.
Yes.
But to your point, you just do need to start small. So in terms of if you have maybe 300 malangeni or 500 malangeni, it is important that you actually start putting away what you can actually afford. And over time, that amount grows as long as you maintain consistency. And it will help you to fulfill and close some of these fiscal gaps that you are mentioning, or also moves you a step closer in terms of some of your financial goals and aspirations.
Absolutely. From a Nedbank perspective, how do you help clients understand the difference between saving and investing, and why both are important?
Yeah, so savings and investments are closely related. Sometimes it's difficult to make a distinction, but the key difference is that they're usually for different purposes. So saving is typically for your short-term needs in terms of your short-term financial goals. So that's either you're saving for a holiday, you're saving for some immediate expense, school fees, uniform, groceries even, and even if we're saving for a full tank for every end of the month. Whereas investment is more of a long-term goal. So that's when you are saving for bigger financial goals, whether you want to buy a car or make a hefty deposit on a car or a property purchase, as an example. So basically, we say that it's important to have both of them because they serve different purposes. Short term, in the savings, maybe for your emergency kind of expenses that may arise. You don't know what will happen at any point in time, so you want to create a buffer for yourself.
Absolutely.
And then investments as well, it serves a different purpose because you have a specific long-term goal that you want to attain and you work consistently to get to it.
Yeah, and so how do you propose Nedbank comes into the play now in supporting its customers in building that, what you call a balance between short-term financial security as well as long-term financial or wealth creation?
I think it's important to have conversations with yourself that are honest with respect to how you want to, what you want to attain. Is it wealth creation that you want to attain? And then, or is it an immediate cushion like we've spoken to? And what are you actually saving or investing for? So in terms of what we present as the bank is basically options that fit different risk appetites. Our risk appetites may not be the same between Zama and Sfiso.
Yes.
Our goals may also not be the same with respect to what we are saving for and how long we want to save for. So those are the key things that you would want to actually ask yourself and align in that. But in terms of the offerings, of course, there's a spectrum of options that fit those different variables to say, is it short-term, long-term savings, accounts, notice deposit accounts, fixed deposits accounts, retirement annuity, unit trusts and shares. All of those are options that build wealth creation or create a buffer depending on your immediate need.
Let's talk to that first-time investor walking into a Nedbank branch today or tomorrow, whatever. How do your teams then guide them in choosing the right product for their needs? I mean, you mentioned a plethora of products there.
So I believe that your need is actually what helps us to determine. Remember, I did say that we are financial experts and we also want to help you create your financial risk. But underpinning that, the initial guidance would be to say, start simple, with as minimal or as low a risk as possible. So these options can include, fixing your money for a fixed term, which means putting away the money and knowing that you're earning an interest. You're earning interest or compounded interest over a period of time. Or a notice deposit account. That's more medium term to say, I'm going to put away funds for a certain period of time and I'll give the bank notice when I want those. But those funds, whilst they're placed there, are actually earning you a return as opposed to sitting in your purse or under a mattress.
Absolutely.
Yeah.
There's often a conversation around time and discipline. And that's very key in investing, right? That's what you say.
Yeah.
how would you say Nedbank then encourages and supports a culture of consistent investing among its clients?
I would say that you mentioned the element of time, and probably time is the best indicator and probably the most powerful tool to have. Time is always of the essence, and we always say start early and start consistently, because the benefit of investing is that you earn the interest, and when you earn, you then start to earn compound interest. Yes. So what that means is that you earn interest on the fixed amount that you've invested, and then you earn interest on the interest that it's earned as well. So if someone starts saving at 20 years old, over time, even if they are saving smaller amounts vis-a-vis someone who might start saving or investing at the age of 40 as an example, but they're putting in larger sums, you would find that the one who started much earlier with the smaller amounts is actually making more based off of the time elements, because their interest has compounded significantly. So that is where then the time element comes in to say you start to grow your wealth more. And the consistency ensures that this wealth is actually growing consistently as well. Yeah.
So while you speak to the 20-year-old. I love the example. You're making an example of a 20-year-old and a 40-year-old, and you break down how compound interest can be life saving for both of them, but particularly for the one who started early. And it just makes me wonder, because we often hear people who get into employment early say, I want to enjoy my money first. And, do you want to talk to that person, that young person right now?
I do want to talk to that young person. I mean, just last month we were coming from the Global Money Week, where we raised awareness on this. I do want to talk to the young person, because there's not a right time, if I may say. The only right time is now, or immediately, when you come to that realization. Though I made the example of the 40-year-old, it doesn't mean that we can't start today. And also, it doesn't mean that you have to start investing with a large sum of money, or I can't afford it, or I'm just not the investing type, etc., whatever you may tell yourself. But I would say, yes, start small. If you want to enjoy your money, and you're enjoying your money as the 20-year-old, then surely you want to enjoy your money for a longer period.
Absolutely.
So you want to create a fund for your enjoyment. Make it be consistent. Allow yourself to have a consistent life of enjoying. So I would recommend that they absolutely do save. They've just started working, like you've said. They consider options of short-term and long and medium-term type of investments. They create emergency funds at a minimum, so that should the fund go a little bit lopsided, they have a cushion to bail them out, if you may. So I would recommend that they just maintain the consistency. There are various options in the market, and there are various options that are sold by banks and financial institutions that would fit that profile of a customer. So it's all about, once again, determining your needs. What does that 20-year-old want in 3 years, 5 years, 10 years? Or what do they want in 6 months or a year? That's part of this enjoyment phase.
Absolutely. So I take it that next to time, the next critical thing is discipline.
Correct.
Because that then informs the consistency, and the consistency is essential, as you put it, right? But from your experience, what would you say are some of the most common mistakes that your customers make? And then how does Nedbank come into the play now to make sure that these people avoid these pitfalls?
Yeah, I think we've just touched on some of these. Common mistakes. It's the voices in your head to say, actually, I don't make enough money. I'll start investing when I make more money, or I'll start next year. And we're having a conversation at an apt time. It's Q2. Let's review our, what do they call them? Goals.
Yes.
What are the goals that you've put in for the year? Let's take stock. Am I still on track? Am I still doing what I wanted to do? Are my financial aspirations still in order? And it's okay to start over. So do start over, and anytime is appropriate time. But also, I do want to stress that the longer you have or listen to these voices or delay, then you lose the element of time that we've just spoken to.
Yeah.
Which means that the value or the creation and wealth that you're trying to build or create is also slightly impacted. But that's not to say that you can't build the consistency and add additional income into your savings and investments.
Absolutely.
But those are the common mistakes that we find. We also find that people may not understand the risks associated with some investment options. So I would also encourage customers to do their due diligence, to research, to find out what works for them, to understand how the products work for them. I mean, we see a lot of cases of bofaqata, as an example, where you know, something seems too good to be true. Invest 300 and we will triple your money in 2 weeks.
Come on now. Yeah.
So those kinds of examples should be red flags and triggers of going off. So you have to be sure that you understand the risks. You have to be sure that you are comfortable with the risk you are taking in terms of the appetite. When will you get your returns? How long will your money sit there? And do you understand what potential risk there could be there with respect to the interest that you earn and the like? Yeah.
Absolutely. So I take it quarterly reviews, if you will, of your goals, very, very essential. But also being realistic about your goals and ambitions, very essential as well. Imposter syndrome, you know, that time that is delayed, you're saying it's not denied, but it's very important to know how to have that conversation with yourself. And I think if you're able to, you know, vet those mistakes and make an informed decisions, then you'll be good. I want to give you just one last opportunity to speak on whatever I may have forgotten to ask you about, because we're done with this conversation.
Yeah, I think I want to reiterate the 3 things that we spoke about with respect to choosing your investments. Reevaluate what's your financial goal. That's the first one. So you must make sure that you determine what is your goal. Also, how long are you willing to put your money aside for? So is it short term? Are we saving for emergency, or are we saving for a long-term goal? And then how much flexibility do you need? Will you need the money immediately, now, or how would you want to access your funds? And how would you want to contribute to your funds? So those are the 3 main things that I would highlight in terms of the selection or the choosing of investment options, and then the consistency. Keep in mind the consistency, the diligence, the discipline that we've spoken about. It doesn't help. Your quote is talking about risk to some extent, but also we see a note that, you know, you'll put away some money in a savings pot or whatever the case may be, but when you feel like, I'm really broke and it's a week before payday. So you start to tap into that, and that sort of erodes the discipline, because part of the discipline is invest, tuck the money away, but also learn to live within what is then remaining. That's why we encourage that you save what is affordable to your pocket. Don't overstretch yourself.
Overstretch yourself.
Yes.
Absolutely. Zama, thank you so much for your time. Zamangwane Dlamini, Head of Branch Networks from Nedbank Eswatini, decided the most powerful tool for financial growth, and that is investing. And there you have the conversation. You can make an informed decision as you invest, whatever it is that you can invest. Very important. Let's go for a net break. The show continues when we return.
Welcome back. You're still watching Nedbank Business Watch. Thank you for steering us. We now get into our final segment, the market analysis with Toba from Nedbank Eswatini. Very good afternoon, Toba. It's been a while. Hey, welcome back.
Thank you, Lulu, and good afternoon to our viewers.
Yeah, all right.
And,
Okay.
It's good to see you.
Good to see you too. Well, we've just received breaking news from the Ministry of Natural Resources with fuel price hike adjustments effective in 24 hours. Are those the effects of the global conflict? But I did read that there's an MOU signing that's going to happen today. Is that still going to happen? Is it happening today?
At this point, it's not confirmed. So it's all speculation from sources that are closer to the matter, that an MOU for a peace deal between the US and Iran is currently being discussed. Hopefully it is signed, and the market has responded to those news that a peace deal is in the cards, and that has pushed the price of oil significantly down. So we are waiting to see if that is signed, and then if it's also being upheld as well after its signing.
Okay, so what happens after it's officially signed? When will it translate to us here in Africa? Fuel prices being decreased. The previous weeks. What will happen? What does it mean actually?
Right, so if it's signed, then it means that the Strait of Hormuz is going to be opened, which means that 20% of the world's energy that is currently in sort of a bottleneck and it's not being moved through that passage, then will be freed, which will mean it will sort of alleviate fears of supply concerns, and thus pushing the price of oil down. We've already seen the price of oil going down because of the news that the MOU is currently being signed. But as to when that is likely then going to, come into our pockets, me and you, it's difficult to tell. As we've seen, even with the price increases that we're seeing now, it has taken a while. The war started a while back, but we have gradually been seeing these increases. So it will just depend on supply then, I would assume, and there's other factors, because in addition to the price of oil, what then comes into play is the price of the dollar, the exchange rate, and all those factors. But we're hopeful that a peace deal is indeed signed, and that it is adhered to, and that will lower the price of oil.
All right. Let's just get into our figures today. Perhaps we can start off by looking at equities this afternoon. What's happening today?
Well, so equities are doing quite well this afternoon, with the S&P 500 showing record highs of about 7,259.22. The FTSE at 10,448 pounds, as well as the JSE all share. So with the S&P 500, I will start there. It's driven by a number of, two factors mostly. The first one being a strong first quarter earnings, because most of the companies are reporting their first quarter earnings. So most of them have reported numbers that are above investors' expectations for the first quarter. Actually, the numbers that we're seeing are close to the numbers that we saw in Q4 of 2021, which is post the pandemic, when companies were recovering from the pandemic. So the numbers that we're seeing in that front are quite impressive from an earnings perspective. So we've seen quite a number of the reports, or financial reports, that are coming through showing that. The second one being tech companies, Intel, Intel yesterday, then others, tech-related stocks are also just doing quite well. So those have sort of pushed the price of equities as we see them. The third thing is just the macro environment, with the talks of a memorandum of peace being signed or being discussed. Investors are then sort of less averse to try and riskier investments.
All right, impressive indeed. Moving on to commodities, Toba, this afternoon, as you said, oil prices seem to went down today. Let's take a look at what's happening today with Brent crude oil and gold.
All right, so gold is doing quite well, gained about 3.43% this today. On the news of the peace deal that is being discussed, we've seen the dollar taking a hit against major currencies at the back of that. So in an environment where the dollar is weakening, we normally then would see investors going for gold, like non-yielding investments. So that has pushed the price of gold up. Also, what the implication of the peace deal is that then we're likely to see interest rates being cut in the US because the inflationary effects of the war will sort of, the fears of that will sort of being alleviated. So what that means is that rates are then likely to go down for yielding instruments like your bonds and your treasury bills and all those things. So investors are then looking into non-yielding solutions. So gold is quite attractive in an environment like that. Okay. So that's why we've seen gold gaining. And then in terms of Brent crude, it has taken quite a significant knock. 23.07%, going to 103.72 per barrel. So that is at the hope that there is going to be an agreement and that the Strait of Hormuz is going to be opened and that then the 20% of the world's energy that flows through that path is going to be freed. Yeah, we can only hope for the best, Toba. And lastly, to our currencies today, how is the Lilangeni trading against other currencies? So the Lilangeni is trading quite strong today. I will reference it with the rand. At 16.33 against the dollar, which is 2.13% up at 19.24 against the euro and 22.28. Which is 1.3% against the pound. What is happening there is the dollar weakness, firstly. And then secondly, there is also a situation where now investors are sort of, taking money or borrowing a lower yielding currency to invest into a higher yielding currency. So we've seen investors selling off the dollar to buy the rand. You'll note in the US rates are currently at about 3.75%, while in South Africa they are at 6.75%. So investors are taking advantage of that current arrangement, and that has sort of been influenced by market sentiment that rates are going to be hiked in South Africa at least twice this year. So which means even that 6.75 that we're currently seeing is likely going to go up to about maybe 7.25. So that has sort of then created this carry trade, call it a carry trade, where now investors are borrowing from a lower yielding currency to invest into a higher yielding currency. So that has pushed the price, or rather the rand strength that we are seeing. All right. Well, it's 3 minutes before 3 o'clock, and that was our final segment with Toba, unpacking today's market analysis. Thank you for joining us. This was Nedbank Business Watch. If you've just joined us right now, you can still watch this episode on our YouTube page, Eswatini TV. And if you still want to make a choice between saving and investing your money, do visit any branch of Nedbank Eswatini countrywide for more details on that. We'll see you next week, Wednesday at exactly 2 p.m. Enjoy the rest of your day.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.